Hey, it's Mark Alexander with Benchmark Mortgage. I wanted to talk about a topic I was talking to one of my partners about yesterday about some of the common FAQs or frequently asked questions that I get in the mortgage space from clients, from partners, or anything, right? And so I wanted to go through 7 questions that are on the screen here. So the first one is going to be, am I allowed to take out new debt during a mortgage, right? And so the answer is maybe, right? It's really up to, can those be allowed during in your debt to income ratio? For me, the rule of thumb is if you're buying a home, really stay away from this if you can, if at all possible. The reality is if you're taking out a new car, that could jeopardize your loan approval. And the last thing you want to do is not disclose something to your lender that could get caught up in the last minute, right? Second question is, should I put more money down or less money down? And this again it depends on the person, right? In most situations, one of the biggest mistakes I see clients making is putting everything they have into their home and not leaving themselves with an emergency fund or having liquidity for home renovations, other investments, other types of investment vehicles. So ultimately, in my situation, it's really everybody's situation is different, but the key is going through and analyzing what does it look like to put 5 versus 10% down, or put 20% down versus 3% down. How does that really affect your total cost? And doing an analysis on that, which we can help with. Third question I get asked a lot is, how long does it take to get pre-approved, or how long does it take to go through the pre-approval process? So in most situations, and everybody's is different, but in most situations, as soon as I have an application, you upload all your documents. It's usually about a 24 to 48 hour turn time from start to finish to get your pre-approval done. And really the next question that kind of leads into is, how long does my pre-approval last for, right? And so this is a great question. Usually pre-approvals are going to last for 120 days, because when we pull a credit report, your credit report is going to last for 120 days, or about 4 months. If your income, credit, asset situation, the 3 major pillars of a mortgage approval, if those have all stayed the same or even gotten better, ultimately your pre-approval should not change. It should not be any different. The fifth question I want to go through is, how long can I lock my rate in for? And so this is a question that ultimately is I'm getting more of right now with rates fluctuating a lot. And ultimately, you can lock in your rate for, usually anybody's going 30 to 60 days, but obviously we can do 75, we can do 90-day rate locks. If you're buying a new construction home, you can actually lock your rate all the way up for 365 days or an entire year. Most of my clients are locking in rates from about 30 to 60 days. So what are the requirements if you're self-employed? So this is a big question, and I go through this a lot, especially around this time of year. If you're self-employed and you're looking to buy a home, the bank is usually going to look at the last 2 years of tax returns. There's some cases where we can go off a 1-year tax return, whether that's an underwriting system decision, or if you've been in the business for 5 years plus. But another thing to take into consideration is that the bank is going to go off what's called net income, not gross income. So, for example, if you generate $100,000 in sales, but you write off 70,000 expenses, the bank only really sees that you're making $30,000. There are some add backs and some other calculations, but ultimately, net income is the key when it comes to normal mortgage qualification. There are some other strategic products with bank statement qualification, P&L qualification, 1099 loans. There's different types of loans there that we can talk about. If you have any questions on that, feel free to give me a call. And the last one is, why should you choose a direct lender versus an online lender or a big bank? And my best answer I can say to this is that if you're working with a direct or a local lender, you're really getting more of the hand-holding experience. You're going through a full consultative approach. You have somebody that's local here that knows the Miami market, knows the Fort Lauderdale, the Palm Beach market, and knows the area to really make an educated decision, make sure they understand the condo market as well. And also, I'd really just making sure that you're buying a home, obviously, but really what you're doing is you're making a large financial decision. And so in my opinion, working with a local lender gives you really the expertise you need to make a decision, versus sometimes big banks, online lenders are more transactional and it's more of a numbers game for them. And you're really just kind of going through a systematic process. So on our side, it's going through that process, but it's really giving you a custom tailored mortgage solution to make sure that you and your family are being taken care of. So if you have any questions on this, feel free to reach out. Look forward to hearing from you guys, and happy holidays. Take care.